Welcome to the market recap presented by Tackle Trading. Get in the game. Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders.
Welcome
hello,
to the market
YouTube.
recap presented by
This is
Tackle
Frank. Come to the market
Trading.
recap, and I am having a computer revolt today. Good times. We'll see the intro twice, and then we will try again. Tackle Traders.
Welcome to the
hello,
market
YouTube.
recap presented by
This is
Tackle
Frank. Come to the market
Trading.
recap, and I am having a computer revolt today. Good times. We'll see the intro twice, and then we will try again. All right. Well, that's one way to get the day started. So I'll tell myself, good afternoon, Tackle Traders, and hello, YouTube. Frank here once again, coming to you with the market recap. I am the master of technology, as you can all clearly tell. One day I'm going to have a smooth intro, but that day is not today. I hope everybody's doing well. Hope everybody had a good day in the market. Good to see you guys as always. Coming to you with the market recap for the 14th of November. We're hanging out on a Wednesday, another day where the Bears take another one, right? Another day for the Bears to chalk up under their belt as certain things started to break down a little bit. Good afternoon, Ed, and everybody else. Taking a look ahead to earnings tomorrow. Very light schedule, but we do have Walmart, so a pretty big name company, component of the Dow, the S&P 500. They are reporting before tomorrow's open, so keep your eyes on that. But as far as big names, S&P companies, that is the only one reporting here tomorrow. So we're out of earnings season, but Walmart will be interesting. I think some folks might pay attention to Walmart earnings. Taking a look at our overall indexes here today, starting with the S&P 500. Bears really took control, and they really kind of took control late as well, closing near the session lows, although we did rally off of the intraday lows. Breaking down and closing, I think, a little bit below that support level. That's not what you want to see if you were kind of thinking that maybe we'll be seeing an inverted head and shoulders pattern going into the holiday season. Obviously, we breached it. We did kind of rally back up off of those lows. Momentum tomorrow is going to probably tell us a lot. If we continue this momentum early, I would expect there's more room to go on the S&P. And looking at it from just a purely charting perspective, if this little support level from days gone by fails, why not be like the NASDAQ and work back towards those lows like we're seeing it do? There's really not much to hold it up if this can't hold. Let's see how our opening momentum goes. If we take out this intraday low here today, well, probably going to see increased selling, at least for a little bit. If we catch, we've seen that many times where we close just a little bit above or below and push right back up the next day. So I do think tomorrow's open is going to be important, maybe more important than some opens. Over on the NASDAQ, they are showing a lot more weakness, taking out that little two-day floor that they had built here the last couple of days and closing well below their, or just not quite at their low of the day. But this is a pretty bearish chart, as we've all kind of been looking at together with its failures at support. We could argue about the NASDAQ being, or the S&P being right there, and it's true. These guys, there's no argument, right? They're definitely clearly now 3 days in a row closed below that pivot support level from a few days ago or last week. Continues to be very weak, technically speaking. We've got a little room to go before we get to these lows, but we are closing in a little faster in the NASDAQ than we are on the S&P. Our Dow continues, as it has been for quite some time, to show relative strength. Certainly not a big winner today, technically, but unlike the S&P that did breach that little support level from a few weeks back, we bounced off of it very nicely on the Dow Jones here today. Clearly, closing down on the day, so the bears definitely won, but encouraging, from a bullish perspective, and one of the few things that we're seeing, index wide, that we did have some buyers come back in off of that. Again, as we've seen these patterns develop over the last few weeks, we know that a lot of folks are really eyeballing that. And that really is kind of the last line of defense until we work back towards those lows that we put in. And so we need to, bulls, if you're out there and you're trying to win this thing, you better get going, because we're running out of room. And just in regards to a 61.8 fib, yeah, I mean, that's pretty deep. For me, I'm not a huge Fibonacci guy personally, Ed, but that is, a little deeper than I would like to see it. You can see it bounce off of all of those fibs for sure. But if I'm going to call it a retracement, I want to see it not retrace quite that deep personally. And I don't know that there's necessarily a one size fits all answer to that, Ed. But, for me, that's a little, people are supposed to be excited on pullbacks. They should be looking at it saying, hey, this thing's gone down a little bit. It's worked its way back. Let's hop right back into it. And when we have those deeper and deeper and deeper pullbacks, where's the excitement? At least that's kind of how I look at it. Pullback really is just an excuse to buy a trend. We've just been waiting for a couple of days or a little bit of selling pressure. So that deep of a pullback, yeah, that wouldn't be what I would consider a pullback. Now, if there was a strong support level there, something like that, could be open to it. But just from a purely pullback point of view, Ed, hopefully that gives you some ideas, at least where my head is in that regard. Keep an eye. If we fall through here, we're probably falling through on the S&P, and we're basically giving up all of the lines of defense that we have, at least technically, on our charts. We've already lost it on the NASDAQ. The Russell has already been weaker, and it didn't really have a situation like that working for us in the first place. S&P breaks through that tomorrow. Dow Jones goes along with it. I mean, there's just not going to be a lot of support until we get closer to those lows to prop this thing up. So again, bulls, if you're out there and you want to get going, unless you want to try to double bottom, I guess maybe that's their plan off of those lows. There's you better get moving. So over on the Russell, again, definitely one of the weaker areas. Certainly I think everyone would probably agree that from a purely technical point of view, at least. Really nothing to hold us up. We've already broken, any little intraday or swing support levels that we might have been eyeballing. We have a ways to go in the Russell. So I mean, it's definitely not looking pretty out there right now for the bulls. So to put it nicely, but it wasn't, all bad. Materials held up pretty well in a day of heavy selling, holding up off of that support level. I would say in all of our indexes, Fortino, it's going to basically be these lows, the low points that we put in. So, you can argue the tails. I'm going to be looking kind of at the bodies first and foremost, but that is where I'm going to be looking at that support level. If we clearly give out here on the Dow on this little swing that we're sitting on right now, and if we continue that downward movement on the S&P that we barely breached a little bit here today, to me, I don't think there's any real reason to prop us up from a support level, at least today. New things can develop and we'll follow them along together. But really, there's some room. Does that make sense, Fortino? Do you see kind of where I'm coming from, at least? That's why I think that this tomorrow's a big day. If we take out both S&P and Dow support, again, I'd understand people buying it at the Dow at that support level, even the S&P with some upward movement saying it breached, but it held. But if it falls through, who would buy right here? Who knows what anyone will do, right? We don't know the future, but technically, it's way down here on all of our indexes. It's not a terribly far. We can make it in a day these days, right? But there definitely is some space between the break of that support level and those new or those old lows. So definitely something that we want to be keeping an eye on going into tomorrow. I think it's an important day tomorrow. Most days are important, of course, but tomorrow, I think with where we are, we've got some potential problems. And it looks like for some reason, technology continues to revolt. I don't know what I did to technology over the last 2 days, but technology has turned on me. I'm trying to bring back up my material sector chart, so we'll give it just a second. While we do, anybody, any interesting stories from today? So anything interesting that you're keeping an eye on? I don't know. I just lost my my screen share there. Man alive, I was on a good technology run too. Those of you who know me know I complain about technology a lot because I'm not very savvy at it. So you'd think I would get better, but as I get older, I don't get any better. Oh, there we go. Okay, we're moving back, coming along nicely. Here we are on our materials sector. Yeah, they continue to free fall. What, down another 21% for PCG. They were, of course, in the news for for all the wrong reasons with the wildfires, the utility company, and yeah, I mean they have been hit hard, and it doesn't sound good. I've not done a ton of digging into it. It's not that of an interesting story to me, but just the headlines, it don't look good. It doesn't look like it's out of the woods just yet either, unfortunately. So yeah, another rough day for them. Almost 22%. Crazy. Over in the materials, again, we were able to hold that point. And again, this is kind of seasonally tends to be kind of strong in the late part of the year. So I think maybe, again, if we can hold up here and start to see that movement, I still think in this type of a market, the best way to think about things directionally, and again, this is just me, no one ever has to agree with anything I say, is on the brakes. I know the support bounces can be tempting and the risk to reward can be appealing in certain cases. But I do think that overall, for me, in this type of a market, I do prefer things that are breaking. And so looking at the material sector, for me, a clear buy sign is going to be the break up here. But as long as we hold, I could understand if we start to see some signals off of this low, I could understand the bullish perspective. If that breaks, again, we're kind of like our indexes. If this last line of defense falls, there's just not a lot to prop us up, technically speaking, which is, of course, a problem if you are a bull. Over in energy, we moved a lot, but we didn't really do anything, continuing to hold that support level that we probably expected that to hold. It continues to fight for us, but we're not seeing a lot of people carrying through anything. They might buy off of it, but they're out of it quick. That's to me, that's a very important support level to hold. We held it today. I wouldn't buy off of that. There's a ton of negative momentum here, but it has held. That thing breaks. We've seen how ugly energy and crude and stuff can get. But again, another day, another victory, and that's why support is so important. It really helps, understand, why someone's holding that up. Because in a bubble, why is anybody buying energy right now? It don't make any sense to me, at least. But when you kind of apply the technicals to it, well, there is a lot of support there from days gone by. Over in the financials, they got hit hard today. It was kind of an interesting day. I mean, they really did get hit hard, no doubt about it. Working all the way back to their low, their swing low from back here, and then kind of rallying up and closing right on top of that old support level. Again, this is kind of where we are in a lot of things in the market right now. We've got a little bit more holding them up if you want to identify this as support, and I think we can do that. I think we should do that personally right now. But that falters again. There's just some empty space. So why not let it come all the way back down to the lows and then try it on a double bottom bounce if you're a buyer, right? At least that's where my head would be. If this breaks, why would I buy it until it gets back to the bottom? And then I'll play the double bounce if that's what I'm looking for. Another big day, financials, I still am open. They haven't broke support yet. They did hold that support, although it was close. It was by a hair. So industrials back and forth day, closing right on the top of that old support level. I don't really think we have a whole lot going for it, but I do think if that breaks, again, kind of we're seeing this, market wide in a lot of areas, but independently, you look at this, hold up for now 3 days, those little floors start to develop. If those floors give out, that dominant trend has a tendency to work out. So if we end up breaking through that, we haven't done anything right. Much like the Russell, we rallied, but we didn't break resistance or anything like that. So all we're dealing with, right now is a bearish retracement that's on this downward swing, right? Kind of caught some footing at an intraday support level over the last couple of days. If that gives out, well, there's more room to run. And that's if you're bullish positions, you have to be concerned about that. There is room to run to the downside if these things give out, and they're going to be tested really soon. I'm not saying they're going to lose or not win their tests, but I mean, that's where we are on the charts. And so, bearish breakdowns in some of these areas might be something that we can kind of keep an eyeball on if that's the way this wants to play. Tech, another rough day over there. We're already back to the support level, or at least the bodies of those candles. In technology continues to be very, very weak. We didn't get to the actual low point, kind of working into the bodies of those previous lows, but this guy is just rough. Right. So after failing this trend line, it's gone from bad to worse. It'll be interesting to see. This is kind of our first chart that's presenting us that hypothetical double bottom placement, right? Where, hey, if I'm thinking double bottom and I'm not the type of trader that is buying when it breaks, I'm trying to catch it at the support level. This is the first chart, sector-wise at least, that we're getting that opportunity. This should be a tempting price if I'm a bull, right back down here to support. Just a week ago, I did pay $4.5 more a share for this. Now I know I'm back at support. Well, let's see how tempting that is. It's not that tempting for me, but it is there. It is there, and it's definitely something that we want to respect. If we break through, that should give us more opportunity if we go into a weekly chart here to kind of see where our next location is and just look at this from a different perspective. It looks a lot like a bearish retracement, right? Drop down, made a lower high and showing downward movement. There is some room to go. I would say our next support level is going to be down here in that 63-ish range. So another $3, give or take, if that support level falters on us. Those will be my expectations within the sector, the tech ETF. On the other end of it, we did sell off in staples, but I think that's an intriguing thing. We've certainly watched this thing, perform extremely well as of late. We've kind of been waiting for a pullback, at least if you're, broadly speaking, or not specifically in the ETF. We've now had a few days in a row, kind of hit that first level. Of course, that was an old level of resistance, right, that we took out not too long ago. So this is going to be the first price point where potentially I could be interested as a buyer. Ideally, and again, you can ask, you can't expect, but you can ask. Ideally, we pull back into this 55-50-ish type of range. That is what I would like to see, a little bit of a deeper pullback in this area. I don't know that I'm going to get it, but it never hurts to ask. But really right now, we do continue to show a lot of strength. We're just kind of in that pullback phase, have shown, at least to me, no reason to think that this is any more than just a pullback within the staple sector right now. Utilities pushed down a little bit more than they have been as of late, maybe in part due to PCG dropping 21%. That might have had a little bit of an impact. I know they're not a huge, component of this ETF, but well, when you drop that much, you're definitely not doing it any favors, right? But we continue to really, I don't think there's a lot to make out of this other than resistance continues to hold within this sector. Once again, yesterday we had that close. We've been, I don't know, fooled's the right word, but I'll use it. We've seen it before, right? Where it took that out with no carry through the next day. Once again, we see it. This is just a tough area for this to get through. It keeps trying. You have to give it a little bit of credit for that. But, I mean, it's just not happening. It's not happening. And sooner or later, I mean, we're either going to break or we're just going to give up and we're going to work our way back down, For me, if I see it, and I'm going to, until I start to see things breaking back through some resistance, Fortino, I'm going to assume there isn't a Christmas rally. If we bounce off of on the Dow, though, for example, and go back up and take out that high, or rally back on the S&P and take out that resistance that we failed at, late or in mid last week. For me, probably the number one area I'll be looking into is the discretionary sector. That would probably be my first area that I will be looking at. Those are, places that, I shop. Well, okay, I'm lying. Places I would shop if I were the type of person to go to those type of stores. I'm the type of person to buy it off of the internet. But, those type of companies are the type of companies that I will be looking into first and foremost. So the discretionary type of companies will be where I'm looking at. S&P would be an area that I would be looking at from an index point of view. As well. So those would kind of be the two areas that at least I would be looking towards. Materials, while it's not really a Santa Claus rally, it does, have some history of performing well this time of year. So that would be another area that I would be looking to. But we got to get some breaks first for Tino. And that's what's great about it. If there's going to be a Santa Claus rally, who knows? But we're going to have to break through resistance. We're going to get those buy signals ahead of it, right? And then, when time passes, then we'll call it a Santa Claus rally. But it all starts with a buy signal, right? It all starts with breaking resistance or establishing a higher low, or both of those things. That's what I love about this, is we can call it whatever we want. There's no Santa Claus without breaking resistance. So we that's kind of like coal in the stocking, if you're old enough to remember coal in the stocking. So over in healthcare, another downward move over there, but again, kind of like the Dow, holding that previous swing. So again, here's that pattern for Tino, where we'll catch up and we'll run and we'll take out resistance, and then ho ho ho, Merry Christmas. Right now, this is an area that has held up better. We have held, it looks a lot like the Dow Jones, right? As you look at its chart, at least over the last few days, in regards to holding up. Again, another important area, though, because as much as I do like healthcare, and this is, and has been for quite some time, my favorite sector from a bullish point of view, not every day, of course, but overall, as much as I like it, if that support level gives out, I'm not going to like it till 87 again. So, I'm going to be watching, for it to work all the way back down into these lows, into this 200-day moving average area, just like it did last time. If that cannot hold. So another one of those charts that right now still can be appealing. And again, this isn't how I'm approaching the market right now, buying support bounces. Some people are. Some people did it right here on this sector ETF, right, off of today's low, coming in at least short term off of the bounce. But we're able to hold up. We're kind of, we're testing, as you can kind of see, we either failed tests already or we are knocking on the door. That's why it might be interesting the next couple of days. Here's my Santa Claus, area that I'll be looking towards. And the things that we can watch, and this is what will be nice, while it's ugly today, we, haven't broken that support level, right? We're still holding that up. If we can start to rally back up, we can take out not just one, but potentially two levels of resistance, depending on how we want to play within this area. So this will be this is my go-to Santa Claus area. Maybe I'm just a simple dude who just thinks that that's where people shop for Christmas. So, but we continue to work down. We have not faltered at support here, but again, we're getting closer and closer to some pretty significant tests over there. Real estate. Not a whole lot to say today that we haven't been saying. Really, overall continues to show relative strength. No doubt, you're either in or you're, pulling up stop losses, or you're not in and you're waiting for a pullback. And we're, not really any closer today than we were yesterday. Not a whole lot has changed. We still know that we do have, a fair amount of overhead in that $34 range, but we got a ways to go. A pullback into the breakout point would be fantastic, but even a pullback to something like the 9 EMA, a shorter term moving average, could be something that we could take a look at. But we're, not really, we've got another few days before that happens. Lastly, over in communication services, another back and forth day. Fared better than a few areas, but really not a whole lot has changed. If you're looking at it from a sell perspective and you're not in it, again, it's one of those things. We found a little bit of an intraday floor over the last couple of days in the form of these last three lows. If that falters, nothing to hold us up till we get back down towards that previous support level. So while the chart's a little uglier, in my opinion, because we failed at resistance, already broke through support and that type of stuff, pretty important test for it too. So we are seeing, in my opinion, at least, if we're going to get any bullish activity, we better get it soon, because the technical reasons, any one of these things, okay, whatever. But if we start to see all of these different sectors and the last remaining indexes break those last legs of support, again, I can only speak for myself, but why would you buy it if that falters and everything is broke support? I don't get it. I wouldn't. I don't know about anybody else. So we should be an interesting couple of days. Now watch tomorrow, doji, and we'll get nothing one way or another out of it. So, but hey, we don't control what it does. We just react, right? Gold had a little bit of a rally, working back in towards the top end of that 50-day moving average, that 1220 area of days gone by that used to be a resistance and of course was support for a while. Right now, I think if you're thinking bullish on gold, you got to get back above 1220. That was just such a major zone for it for so long. That gets you back above the 50, that gets you back on the right end of things. We saw today, I think it ran up to 1217 something and got knocked back down off of that. We've seen that. We watched that together. Most of the time that we've been, doing the recap together, that's been, kind of what gold's been doing is either using that 1220 support or resistance. And we should probably expect it to continue to be a fight. Selling off of that's interesting in theory. Obviously not on a candle like this. There's no confirmation, and that's probably the problem. We are in a relatively tight range, so it's probably hard to see this happening. But theoretically speaking, we get a little teeny tiny doji tomorrow at 1218, 1217. Get a little downward movement on Friday, right? So this could be an area where if I'm thinking about selling gold from a price point of view, at least, it could be interesting to me because I do expect that to be a challenge until it's back above 1220. I'm going to assume it's not going back above 1220. I'm going to assume it's going to have a hard time going 1220. I'm going to assume it's going to stay in that 1185, 90 range. I think we're back sideways, and I really don't think it's a great place to directional trade, at least in my opinion, from a swing trader perspective. There are always very interesting intraday opportunities if you're playing things that way. But from a swing point of view, if it breaks back above 1220, I could see a bullish argument for it, just faltered through, failed breakdown, and okay, fair enough. I could get behind that. But hey, first things first, gold, get back above 1220. You may do it, but it's probably going to be a bit of a fight. Really same situation over in silver, kind of closing at the bottom. These guys are a little tougher read because do you use the actual lows back here as your, as your resistance level, or do you want to use really what we were playing off of, most of the time, had that breakout develop here, bounce here, bounce here. I think, you have to be looking at getting above here, before you think too much from a bullish point of view. But honestly, again, this is pretty rough. It better bounce off of this because, again, it's one of those, it's right at that round number. It's broken support, but that's such a round number, $14 on silver. I mean, that's a round number and very psychological. Is as long as that continues to be there, fair enough. But once, we're convinced that that's gone, and we may not be, right? We may push right back up, I don't know. But if we clearly break down below 14, and I don't exactly know what that means, I don't have a number in mind for that because it is kind of an area that continues to bounce around that 14 range. As we've looked before, there's downside potential here. So, I do overall like, if I'm thinking bearish in metals, I think the potential, and I don't think it's here today on either end, but I do think the potential is more interesting on silver than gold right now, simply because gold has a lot of support to prop it up. And silver, well, we just have to basically give up the ghost here at the $14 mark, right? Easier said than done, may not happen. But that is personally how I would look at those things. Natural gas, best day in 14 years. Man, if this is why you don't get in the way of a moving truck. It just went gangbusters, continuing just an epic run. Who knew? We've seen bullish things on it, right? We've talked bullish on it for a while, but I know I can't claim that I knew that natural gas was going to make a run like this. I wish I could have, but nope, did not do that. But this is, again, you never know how trends are going to play out. And that's why when they say the trend is your friend, this is a great example as to why, everybody's just looking eyeball test over the last several trading days, even one in the last week, it needs to pull back. Your eyeballs might say that, but your eyeballs doesn't have to pull back tomorrow, right? We can get into trouble that way. So hopefully no one's trading against the trend in natural gas. That can't be pleasant. I'm sure you guys aren't. And I hope you aren't, but I believe that you guys are wise enough to avoid that. We're strong. What do you say that what can I say that this chart doesn't say? Crazy day, ton of strength. Obviously, if you're waiting for a pullback, you're still waiting for a pullback, right? Not much has changed on that end. What a day. Crude actually ended its losing streak. Hey, it's something, right? When you lost, 12 days in a row, you'll take any win that you can get. Folks finally said, hey, we'll try it off at $55. It's sold well off of its intraday highs, though. We definitely closed well off of those intraday highs. We can watch that 55. That breaks. That's going to present another selling opportunity. Ideally, we can kind of run up. I'd love to run up into that 58 range from a bearish point of view. I don't know if that's asking too much. Probably. I'm not going to bet on crude going to $58 after what it's done lately. But if we could rally back into that old resistance zone, that would be a very interesting price for some potential from a bearish perspective. Potentially, again, you never know if it'll get there, how it'll look. If we have a giant, green candle tomorrow at this 58, well, I'm not going bearish, the next morning off of a candle like that, even though I probably will want to. I won't do it. So, but we really have finally a little bit of step in there. But again, I don't know how you could buy this bounce. I mean, it is a support level. And I'll always respect support. I don't think you sell it right here. I think if you're going to sell, you wait for the to rally up, or you wait for it to break down below support. Because I always think that, whatever it is I'm looking at. But man, you're braver than me if you're taking a shot on the crude bounce. That's all I know. So if you are, good luck to you. I certainly am a little. I would be leery personally, but I have been known to be a little bit of a win. Over in the dollar, very volatile day that went nowhere. I mean, we dipped down below, clear below that 97, rallied up nicely off of that 97, and closed basically right at that 97. Not a lot of information today other than it was volatile. It moved. It definitely moved. Let's continue to monitor that 97. Even if it ultimately breaks through that 97, I think, I would not be, look at it through bearish eyes. I'd be waiting for it to work back into the, to the 20-day moving average, into that trend line that's established. If, I would, deeper pullback, fine, have a deeper pullback. 97 should and has been acting like the first line of defense, although it's been volatile, especially today. But not a lot, as crazy as much activity as there was for nothing to say about it. We're at 97.03 for goodness sakes. So, yeah, no doubt, Christian. Yeah, natural gas. And the sad thing is, I know a lot of folks here. We were watching it, waiting for it to break out, and then it had that gap over that weekend that no one really could explain. That big gap over last weekend, 2 weekends ago, and boy, the only real technical signal it really gave was that little top that it built Monday, Tuesday, Wednesday, Thursday of last week before breaking out. That. A tough one to trade, but I hope everybody has some natural gas. So crazy. All right, guys. Well, as always, it's certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell if you haven't already, and be sure to also follow us over at Tackle Trading on Twitter to keep up with the things we're doing in an interesting market. No doubt about it. It's like, to me at least, these next couple of days, unless it's inexplicably just dead and boring, nothing happens, can be very, very important. There's just so many things at support levels that if that breaks, for me, it's not pretty. It's not pretty. Now, support's hard to break, so I will always respect it. So, never assume support's going to break. Just prepare for it too, right? So a good rule of thumb I learned a long time ago. I used to be really guilty of that. Oh, I think it's going to break out, so let's just assume that I'm going to be right. Yeah, it doesn't work quite that way. Thank you so much, ladies and gentlemen. Be sure to follow those trading rules, of course. Don't go chasing after anything. Plan your trade your plan. Get out of here. Happy trading, and I will see you all in the next one.